Welcome to the Naavik Gaming Podcast, where it is our mission to explore the business and future of video games. We bring together the industry's brightest builders, investors, and thinkers to keep a pulse on current events, dissect emerging trends in games, share lessons learned, and have a great time. This podcast is also part of Naavik's growing ecosystem, which ranges from free and premium research to consulting and advisory services. For more information, visit www.naavik.co. Now, let's jump into the episode.
Hello, everyone. Welcome to another Naavik Roundtable. I'm your host, Devin Becker, and today we have a fantastic panel as usual, including the always lively Aaron Bush, co-founder of Naavik here. We've got Matt Dion, a Naavik contributor and a founder of Always Scheming, and Felipe Mata, head of studio at Fun Plus. How are you doing, Matt? Especially, you got some stuff going on at Always Scheming, which appropriately named.
Yeah, hi. I'm doing well. Thanks. Always Scheming is just kind of my the home for all my writing. If you've been following me on LinkedIn or Twitter, you know I've been really into sort of Web3 topics, and particularly like fully on-chain gaming is a real area of interest of mine. But really, it's just a home for all of my writing. So if you are interested to follow along, it's always-scheming.fyi.
Sweet. FYI, indeed.
Yes.
Cool. Well, we've got some good topics today. Lots of fun things happening, especially during this kind of earnings season. A lot of stuff to talk about around that. We've got a new studio coming from a former DICE head. Quite a few of those popping up these days. Some issues coming out of Embracer, kind of a hot topic at the moment. Axie Infinity also finally releasing on mobile, sort of. Mortal Kombat coming out swinging into a bit of a crowded ring here. And then Take-Two and Ubisoft's earning data, which should be fun to dive into those numbers. But first, we want to get started on the old steadfast topic of Microsoft and their forever merger here.
Yeah, exactly. So we have one more episode on this series. So now, this time we have China that has approved the deal of Activision Blizzard. So it joins Japan and European Union that they approved lately. So there is a total of 37 countries that have already approved the deal so far. But yeah, this is not enough. So as a mean of recap, there are three main regions that have to approve the deal. One is the US, the other is the UK, and the third one is the European Union. So out of these three, only the European Union has approved it. It was after some discussions with Microsoft, where they agreed to let players stream their Activision Blizzard games on company services for free. So preserving the competition in the cloud gaming service, but we still have the US the Federal Trade Commissions that filed a legal challenge back in December. So this is still pending, and the CMA in the UK, which banned the deal in April 26, but also has made a reply to the European Union approval, meaning that this is not enough for them. So it stands by its decision and it's not willing to make a change. So yeah, one more step in this soap opera, but it's still like not getting close to an ending. What do you think? Do you think this is going to change, or it won't go out?
I'm just so tired of this. Like, good on the EU and China for making the obvious decision to approve the deal, and bad on the CMA for just being bad at its job still and doubling down on their stance for whatever reason, which is hard to discern whether it's from lobbyists or some other political push that's keeping them, just clinging on to the cloud gaming thread as the reason to block the whole thing. And specifically the UK's cloud gaming market. It's just wild, and I probably shouldn't go on and on about that. I don't know. I mean, I suspect the US will, turn a corner, I would guess, and eventually come around to approving the deal. The CMA, maybe not. And so it's just a question of whether they can come to some term to kind of carve out, some deal that will allow Xbox to do what it wants around the world, but have modified rules for operating in the UK. That's my best guess on the outcome here, but it's hard to be rational when there are irrational, decision making going on. So we'll have to see.
What can we add here that hasn't already been said about this deal, right? Like, it's been covered to death, and I don't know. It's weird that we find something that Europe and China agree on, but somehow the UK is the odd country out here. I don't know. It's just a strange state of affairs.
Yeah, I find myself in an odd position of rooting for Microsoft to finish an acquisition for once, instead of coming from the 90s where it was the bad thing. But hopefully they'll close all of that sooner or later, so we can move on to talking about what they actually do after that merger. But I guess we've also got the opposite of a merger sort of thing here with an ex-DICE employee going on starting a new studio, which one among many I think we've seen kind of coming from Battlefield.
What a transition. So the news just the other day that a new studio was announced called TTK Games, which is Time to Kill Games. Those of you that are big shooter fans will recognize that acronym. This was founded by Lars Gustafsson, who goes by the nickname Mr. Battlefield. So he came from DICE. He was the creative director at DICE for many, many years. And also, several members of the founding team also coming from DICE, the design director, the CTO, the art director, also ex-DICE folks. No surprises here. They're working on a next generation online shooter. None of the backers for the studio were announced. I don't know if they have any formal backers. I didn't see anything on Crunchbase. But, interesting development. I was at the all hands meeting when Lars announced that he was leaving EA. This would have been 5-6 months ago or more at this point. And it was a big deal, like he was emotional. The others in the studio were emotional. Like, he was a big part of the culture there at DICE. And, if you look at, a lot of these startups, they have a section where it's like, oh, our founders worked on these games. If you go to their website and look at the games they've worked on, it's like Battlefield 1, Battlefield 4, Battlefield 3, Battlefield 2042, Battlefront. It's like, it's all DICE games. And so, obviously a pedigree there, right? Like, very impressive background, very impressive founding team. And I'll be interested to see what they do. As Devin alluded to, this is not the first studio to spin out of DICE. A couple noteworthy ones that I stumbled across in my research here. Embark Studios was the big one. They're founded by Patrick Soderlund, and they make a game called The Finals, which had a bunch of buzz around it not too long ago. It's like a shooter, a competitive shooter with a lot of destructible environment elements to it. And then there's another one called Wayfinder Games, which is backed by Dreamhaven and Makers Fund, and they're doing RPGs, interestingly enough, not shooters at all. They had a little bit in their founding story about, like, they were playing games outside of work, and they were like, what would we do if we had our own studio? It's like, would we make shooters? No, we want to make RPGs. And so they're making RPGs. So anyways, just, the latest in a number of ex-DICE startups, and certainly a good pedigree, a strong pedigree for making a new shooter. So I'll be interested to see what happens there.
So we've had the Blizzard Mafia. Everyone's been talking about the Riot Mafia. Should we be throwing the DICE Mafia into the same conversation?
I'm glad you brought that up, Aaron. I meant to mention that, and I'm curious to hear you guys' thoughts on this as well. I have spoken to... In the past, I've spoken to a couple of folks who work in venture capital at games, and they raised this topic that, like, we see ex-Riot, ex-Blizzard, they have this like pedigree where, they're the founders that come out of these companies are more likely to be successful, at least in their view. But they don't necessarily see that coming out of EA. And I wonder if you all agree with that, if you have thoughts on why that might be, if it is true, if you take it to be true. Maybe it's just DICE Studio specifically or EA broadly. I don't know. I'm curious to hear your all's thoughts.
I think it's kind of interesting. They're sort of a reverse of what we have kind of going on inside EA, where you originally had someone coming from Call of Duty that spun off into Respawn Studios, then get folded into EA, then take over Battlefield as people leave Battlefield. So you get this kind of weird shuffle going around from all the shooter people, right? Like the people that know shooters, that do shooters well. Like you talk about like the pedigree that kind of comes from that thing. I mean, obviously some are going off and doing RPGs, but it's difficult to do a really good shooter, I think, personally, just like to diversify from the typical kind of FPS stuff. So I think it's interesting that these people kind of move around, and maybe we'll see some of these studios that spin off then also get reacquired by an Activision Blizzard kind of company or an EA, and kind of get reabsorbed into a bigger company once again, like Respawn did.
It's an interesting thought. I wonder, like, I'm not sure how to articulate this. Like, it's such a top heavy genre that maybe you see this like sort of cycle of like, you know, from hopping from franchise to franchise to startup to franchise. Like maybe it's just we keep going back to the same talent that has proven themselves, and we're not seeing as much innovation or diverse voices. I don't know. I'm speculating here, but it is a very like it's Call of Duty and it's Battlefield, and there's, you know, a bunch of others in the like next tier, PUBG, what have you. But it's very top heavy, right? It's tough to break through in that genre.
I guess we'll have to see what Ubisoft can try and do with their Tom Clancy one that is kind of somewhere in that, I think. Well, the complete opposite of shooters here, Axie Infinity, finally launching somewhat onto mobile.
Yeah, so exactly. Everybody knows Axie Infinity by Sky Mavis. So it was like this game that popularized the play to earn back in the day, and then like kind of like took a big hit after some hackers stole a lot of money from the chain. So the same company has released Axie Infinity Origins now on the Apple's App Store in selected countries. So it's kind of a soft launch. So this comes after the game was live in for PC and also in Google Play at the end of last year. But in this case, it's very more interesting because Apple has been like less permissive with games that relate to NFTs and has like more rules against NFTs or restrictions related to NFTs. So, but despite of that, they've managed to launch the game there, and indeed the company is hopeful for future in-app NFT transactions being allowed inside the game. So this has been was well received by, I would say, people speculating because the game's launch boosts Axie Infinity's cryptocurrency a lot, like 6 to 10%, but then it went back to the normal trend. So I think like it was more like a speculative move rather than something like really speaking the interest in the market. And also interestingly, it omits the Philippines, which has been the country where the original game was much more popular. So it's been quite interesting to see that this game is not launching there. So what do you think? Is this setting like a precedent in the App Store? And do you think that Apple is going to be more permissive with NFT transactions in games?
I mean, I think it's a big topic. I mean, I don't think this is necessarily like the ideal outcome for the game to launch in a state where what it's most known for, it can't really put front and center. Like that's incredibly crippling. And I mean, I think this launch was on iOS specifically, and they have been on Android for a while, and Origins hasn't performed that well there either. I think they have like a cumulative 150K downloads since they launched basically at the start of the year, and that's tailed off quite a bit. And so, you know, whatever we have seen so far hasn't been the cure to Axie Infinity's woes. Obviously, the team has gotten smarter about managing the economy to at least to some extent. But when you go, the hard part is just like when you go from your core user base expecting to make money to needing your core user base to just be something else entirely. That's a really hard transition to make. And there have always been questions along the way. Like, of course, here specifically is just like with mobile restrictions, how can upselling work? Or even just, they sold a lot of land, like, and there were always high hopes on like that unlocking new types of their business model. And I don't think they've quite figured that out yet. And that also is probably pretty restricted when it comes to what is workable on mobile. So I think there still is a lot more work to do from what I can tell for the Axie team. And we've talked in a previous episode, maybe a month ago, about how Philip Law, the lead game designer for Axie Infinity, has left the company and gone elsewhere. And, it's speculation about what that really means about the state of the game. And, how optimistic he was or the team was, or whether there's agreement or disagreement on kind of the trajectory of where things wanted to go. But yeah, I don't think it's a super positive note. But Devin, I'm also curious to hear your take on this, because I know through all of our week-to-week coverage and Naavik Pro, you've had a much keener pulse on like the actual game design and economy design changes of all things Axie. So I'm also just curious to get your take on, like, even mobile, like this launch aside, like, is Origins good, or are there like still major things that like need to be done for it to succeed anywhere that it is operating?
The big problem that with trying to make this kind of mobile transition is like, as you mentioned before, it had kind of its core audience, and they can't really port that core audience over. Even if you take the earning out of it and just focus on the Web3 aspects, Apple doesn't really want like gated content by NFTs, which is what Axie was kind of famous for, right? You needed to buy the NFTs to play the game, which is part of what made it so successful during like its time period. Because, you got Axies going for $1,000+ and that was a big deal. You needed those to play, all that hype. Now they had to move in Origin to a sort of freemium model where there's like some free Axies you could get. But unless they've changed the game around a lot for this mobile release, you're going to be kind of stunted at like a few initial Axies, and then you can't get any more. So unless they add in-app purchases for Axies and kind of break away from the NFT model for them, or just like hope people want to like find some way to go get Axies on their own, I can't imagine players sticking around in this game that aren't familiar with the Web3 aspect and comfortable going around iOS. And Apple's not going to be super happy if everyone's just doing that and then like no money's actually flowing through them. It just doesn't seem like, with the state of the way Apple is running things and with the way Axie is designed, there's not really like a success path here for the game. I don't think. Like, I can't see like people just going like, oh, I've been so excited to play Axie forever, like, and I just never had the money to buy an NFT before. I'll totally play it now. It's just, there's a million other games on the App Store that are, I hate to say it, better. I mean, like, Axie's not the worst game, but it's also not the best in terms of fun. So, I mean, good luck, but it doesn't seem like a path to success at all. Like, it's just like this transitional thing while other stuff is going on Ronin. They have other games, that they've been adding to Ronin that I like. Some of them are actually starting to trickle out even onto mobile. There was the Heroes Bears one, I can't remember the exact name, that's starting to kind of come out onto mobile as well. They're trying to diversify because they know that's that's not going to be the winner anymore.
Can I ask like a maybe a slightly step removed question for you all that I've been thinking about? So one trend that we've seen with Web3 games is that because of the restrictions that platforms are putting on what is possible with NFTs, tokens, that many companies have been launching versions of the game without the token elements, with the hope that it then upsells or like convinces to move people to other versions of the game with it, or like just somewhere else on the internet like that has more functionality that you can plug into. Have we seen an example of that working yet? I don't, from what I've seen, I don't know if we have. I know there exist examples like this on mobile. There are examples on Steam. But I don't know. Do any of you know, like, has that worked yet? Or like, is this a strategy that probably will never work that way, do you think?
Maybe with some of the South Korean like MMO ARPG games, I would say it might be working to an extent. It's hard to say because we don't have like a lot of sometimes transparency into like how well the Web3 side is doing. but they usually pull off decent numbers just by being, pretty good games on the Web 2 side. So I would say that there's probably a good chance. I know, like Oath of Peak, for example, has been doing pretty good. It seems like on the Web 2 and the Web 3 side. So maybe that's an example one. It's a little bit lighter on the Web 3 than some of the other ones that came after, but that might be maybe one of the examples that we have potentially in that area. The problem is too, like your split business model. If you're making most of your revenue through IAP, do you really want to shove everyone over to Web 3 and like forego that and hope royalty payments are going to be enough? Or vice versa, if you're making all your money through Web 3, then it's like, it's going to be kind of hard to try and make enough revenue without constantly finding end arounds around Apple and things like that. So it seems like it's kind of a rock and a hard place for most of these. And then I even mentioned the South Korean developers, they can't even release it in their own country. So like not just App Store restrictions worldwide, but also even their own country. So it's a tough place to be in for that business.
Also, it's a bit of a conflict, right, in the business proposition, right? So one is like in-app purchases, you buy something like it's more like a consumable or something that you only have in the game, and if you leave the game, you won't be getting back. And the NFTs is something that you really own, that is outside of the game, and then you can transfer and get money back. So it's kind of like two opposite things. So it's as Devin is saying, right? Like if you manage to make one working, like if you manage to make an purchase working, how can you like get rid of that and lose that money and try to sell NFTs, right? For something that you are selling over and over again. And the opposite, if players are there for having things that are forever there for them, how they are going to then now pay just for using them for some time and not owning them.
Yeah, I think Gabe said it. Gabe Layden, just to be clear, at GamesBeat just yesterday, the day before, one line that kind of stood out was him saying that he doesn't think maybe even NFTs or tokens will be the way for necessarily for revenue, but maybe more for marketing, which I thought was kind of an interesting take on it. It's like maybe that's the way that you make money off is just pulling people into the game and then making money off in-app purchases. So, I mean, I guess we'll wait and see, right? We're kind of in the middle of that whole business model shifting. But speaking of business models shifting, not always well, we had some fresh news coming in over the last 24, 48 hours around Embracer.
Yeah, so Embracer just released its full year preliminary results, and this literally just came out like right before we started recording, so we haven't had much time to go through everything. But the stock is down 45% today so far, which caught our attention and is worth a look at what the heck is going on here. And so I took a quick look at the results, and in a lot of ways, it's more of the same. The company, as we all know, went on an M&A frenzy over the past few years, and now organic growth and the timelines of various projects are struggling, and it's become evident that Embracer was somewhat value destructive in that strategy that it aggressively pursued. However, the big thing that's popping out this quarter and what's sending the stock down 45% is that an unnamed partnership that management thought it landed fell through. And that deal would have brought $2 billion in contracted development revenue over the next 6 years. And for context, Embracer earned $3.5 billion in revenue this year. So that's basically assuming that 10% of the total revenue that they thought that they would get is basically vanished from their guidance. And so again, we don't know who that partner is. There aren't many companies that can pay $2 billion in contracted development fees. So it's very likely one of the biggest of the big companies out there, maybe Amazon, maybe Disney, maybe some big co-development partnership with a Tencent, or who knows. It's speculation until they make clear if they ever do. But obviously this change lowers revenue forecast, but the contracted development is also guaranteed profit for a company like this, that is more you get paid to do the work and you don't just earn the revenue when the game sells. And so it actually also has a bigger impact on earnings, and paired with the broader industry softening, pipeline struggles, and efficiency woes that Embracer has seen, the company revised down its adjusted earnings for the next 12 months by 30%. And that's adjusted earnings. So that's the generous view of how they want you to see their earnings as a company. So off the bat, this is not a great look. But when you zoom out, it's even worse than just this deal, right? So Embracer's stock price is now back to its early 2018 levels, so where it was a bit over 5 years ago. And what's remarkable about that fact, and what blows my mind, is that's before all of the crazy M&A picked up. And so revenue for like full year 2017 was 0.25 billion SEK. And over the past 12 months, it's 37.7 billion SEK. And so, in short, despite growing their revenue over 150 times in that 5 year period, they actually created no value for anyone who was an owner of the business. And that's just like, like honestly, like that's kind of, as like, having studied businesses, been an investor, thought a lot about capital allocation. Like, this is bad, and it really shows that like the capital allocation strategy that was the backbone of why Embracer was hyped and what their core like means of growing and thinking about their long term strategy, it didn't work. And so here we are, especially on a day like this, double feeling the pain when a few things are kind of going wrong at once. And so Embracer has a lot to work through if it wants to re-earn the trust of investors and perhaps even partners too, which we don't really know what's going on behind the scenes there, but it's not a good look. And obviously a better focus, like many companies, on efficiency and more focus on ROI of internal projects is one way that they can and will continue to improve. But it also just needs to ship more awesome stuff. It's at the core, games businesses just need to deliver great games, and they need to work out their pipeline issues and just start shipping bigger and better things. And so, yeah, I guess long story short, they always release these like 100-page like earnings documents where you can go and read all the details that you want. So that's there for you. But in short, that's kind of my view of what happened lately. We haven't had much time to digest this, but I'll open it up if anyone else has any other thoughts on what's going on here, or what they should do next. I'd be curious to hear.
More than thoughts, I'm just feeling sorry because you mentioned like people that had invested like 5 years ago, like are equal, right? But like maybe there are people that invested like 2 months ago, right? And they saw their money halving. So wow, that's something that like I feel really sorry for them. And like I feel like when you think of this big conglomerate, you think like, okay, they have a lot of potential for creating synergies internally, right? So that to be able to be more stable. But yeah,
it's kind of an indictment on the roll-up model. Certainly there haven't been a lot of successes to point to. And we just saw, what was it, EG7 the other day also, like their shareholders were saying, we're recommending that they sell the company or sell off parts of the company, something like that. That was another smaller roll-up company. Certainly Embracer has a lot of, one would think, valuable IPs and studios that other publishers might also value. So maybe we'll start to see, especially with the stock down so much, like we'll start to see some interest in selling off some of those properties, or maybe someone taking over the entire operation. I don't know. I'm obviously speculating here, but we haven't seen a lot of successes coming out of Embracer. I couldn't point to a game that was like a flagship success for them. Maybe I'm just not aware of their many IPs, but I don't know. It's not a great look, as others have said.
Yeah, I think it is telling of the roll-up model in general. It seems like we kind of quickly went through and ended an era there that probably was a byproduct of the zero interest rate phenomena, where it was easy to raise money through debt and equity and then chase deals. And at a time when valuations were all high, including the valuation of these companies themselves, that were extra hyped up because people thought that they could continue growing by buying, and it was this feedback loop. That they just overpaid for a bunch of deals, and I really think it's just the discipline of the price that these companies paid across the spectrum that was the biggest issue at stake. But also just sort of the double whammy of like this happening, then post COVID slowdowns, and then post IDFA, impacts, and and then it's just like managing the complexity of all these entities and trying to find synergies that aren't obvious. That's hard to do. So it's really a mix of those things. But really, at the end of the day, I think the biggest piece is just um, uh, diligence on the price that companies are willing to pay for the deals that they make. And we're now seeing that to change and across the spectrum with both Embracer, Stillfront, other companies. There is a much more of a focus on ROI and internally for all the things that they do, which I think is healthy, and in measuring these synergies to really see what they have and where they can lean. And yeah, I mean, I think the roll up strategy it's not dead. There's always going to be M&A, but this type of business, not to say it can't work. I think it can, but it really takes maybe another level of capital allocation, skills in my view. But the other thing, the last thing is that just like with Embracer, it's not all terrible. It's a big company with some good things going on, right? Like their tabletop business in particular, like actually is a very good business that has pretty dominant market share and good competitive advantages. And now that this is a business that also owns gaming studios and like has access to lots of IP, like there's much more that they can do there than in the past to continue building. That's not enough to move the needle for the entire business, but it's worth calling out some of the good if we're going to also talk about some of the bad here.
I guess I wonder with that, is it like, might there also be a release schedule factor here, like where a lot of the companies that they acquired still have something in the pipe that hasn't come out yet that could be like this next big huge hit, blows up their revenue, and then it's like, wow, this was a genius move because now they acquired a bunch of companies and some of them did amazing and some of them just did okay, and that was enough. Like I mean, I don't know what the pipeline looks like for the stuff that they have like coming out, and I know a lot of stuff got really kind of delayed from COVID, and even just the kind of work from home sort of like transfer where people had to kind of move back to the studios, really kind of just everything was slow. Like, is there some potential there that like maybe stuff's just delayed even?
Now you really sound like a crypto guy. It's like, don't worry, it's coming. The game is coming. The big one's coming. It's just wait.
Stake it. Just stake.
I mean, I guess the counter argument would be like every other company has also been operating under those conditions as well, and they've managed to ship games that have been successful or somewhat successful. So, we're all kind of operating on the same playing field. Not every company has, 50, 70 studios, whatever it is that Embracer has, but that's the strategy that they chose to pursue, and you just got to deliver, Well,
hopefully they will. I guess we'll see, right? It's going to be probably rough this week for the stock, at least, as people kind of digest. And as Aaron mentioned, they may not ever mention what that deal was that didn't end up going through. So I guess we'll just have to probably speculate for quite a while on that. But speaking of bloodbaths, Mortal Kombat trying to make a comeback here.
Yeah. So, there's a big announcement not too long ago that there's a new Mortal Kombat title coming. And I thought it'd be a good opportunity for us to kind of look at fighting games more broadly. There's a number of big fighting games kind of on the horizon. And just kind of an interesting opportunity to look at the genre as a whole. So I saw a chart recently that showed the highest selling fighting game franchises of all time, and Mortal Kombat is number one. Surprisingly, Street Fighter is not even in the top three, which would surprise me. But so number two is the Smash franchise, actually, just behind Mortal Kombat, and then Tekken is number three, Street Fighter number four. And by the way, number three and number four are like way behind Smash and Mortal Kombat. It's like it's kind of surprising, but anyways, we're talking about the new Mortal Kombat announcement here. This is being called Mortal Kombat 1. So a bit of a reset. If you remember the last title, which came out in 2019, that was Mortal Kombat 11. So they're going for a bit of a reset here. They're going to reboot the story for whatever that's worth. They're introducing what they're calling a cameo fighter system, cameo with a K, of course. Maybe hinting at some DLC or live service there. If you look back at the last Mortal Kombat, they had some DLC fighters that were like not endemic to Mortal Kombat. So they had Spawn, RoboCop, the Joker, Rambo. And so I'm sure that they're going to run that back. We see these sort of collabs in other games too. And I would not at all be surprised to see Mortal Kombat do something similar with their cameo fighter system as a means to just kind of like extend the runway for a game that's it's actually a $70 box this time, not a $60 box. So they're also jumping on that $70 SKU trend. Worth noting, it's not the first reboot that Mortal Kombat has done either. Back in 2011, they released Mortal Kombat after Mortal Kombat Armageddon. So they've done this before. And so, as I mentioned earlier, there are some other big games on the horizon, right? So Street Fighter 6 comes out in just a couple of weeks here, June 6th. This is injecting some new life into the genre. It's like a quasi open world, which is kind of interesting for a fighting game, right? And they have a whole character creator system where you can customize your fighter, and if you do some Googling, you'll see some truly terrifying creations out there on the internet of custom Street Fighter characters. And then we also have Tekken 8, which is scheduled for maybe later this year, early next year. And of course, on the horizon, there is always the Project L from Riot Games, their fighter, which I'm very excited for. There are a number of other fighting franchises out there that probably most listeners are not on their radar, but if you're a fighting enthusiast, there are several others that are coming out this year as well. And then finally, worth noting that there's also another Mortal Kombat movie in the works. So if you saw the last Mortal Kombat movie, it wasn't exactly high cinema, but it was like a great action flick if you like action movies, and it was true to the franchise, very nostalgic if you're like me and you grew up playing those games. So the Mortal Kombat 2 movie is in the works. That's expected to come out sometime next year. And it's for those of you that watch The Boys, Carl Urban is supposedly going to be playing Johnny Cage. So not hard-hitting business analysis there, but for the fans, personally, I'm excited about that. So anyways, like this is the setup, right, for Mortal Kombat 1 coming into the market. By the way, it's coming out in September. They've only given themselves about 4 months of a marketing window. I don't know if that's good or bad. Maybe we can speculate about that, but kind of surprising. And as I said, they're going up against pretty tough competition, it looks like. So, what do you all think? Should we be worried about this short marketing window? Do we think that Mortal Kombat 1 is going to meaningfully improve on 11? Are they going to be able to hold their top spot in the fighting genre against some of these strong challengers that are coming down the pipe, particularly Street Fighter 6? I think that one will be really interesting. What do you all think?
I don't know. In my case, I used to be a fighter game, but I'm out of the business for a long, so I can't really think like what's the. I mean, I feel like there's a genre that's missing some innovation in the late year. So, looking forward for Street Fighter 6, what they are going to bring. Maybe that makes me revive my attention to the genre. But I don't know if it's just a remake and trying to make the nostalgia feeling of players with better graphics. I'm not sure if that's going to be competitive.
Yeah, I don't entirely know what to make of the brand reset, but putting into the context of just how the games around it are changing too, Street Fighter, Riot coming out with what will probably be a fresh take. It makes sense that if you're the top dog, that you need to put your best foot forward to stay fresh as well in order to maintain that status as best you can. So at a high level view, I sort of get it. I also was looking at some of the numbers too, and I didn't know the tier list of the unit sales of these franchises before looking into this topic too. But on top of, obviously seeing Mortal Kombat be number one, I also noticed that just the sales trajectory of this franchise has been pretty solid as well. So Mortal Kombat 10, I think, which launched in 2015, sold roughly 11 million units, and Mortal Kombat 11, which launched in 2019, sold somewhere between 13 and 15 million units. And I think those are probably the biggest games of the series in steady succession. And, the last two games were 4 years apart. It's been 4 years since that last game. So even though the marketing window is maybe not the biggest, it still probably timeline wise fits what makes sense for the fans of the franchise. So I mean, I would expect it to do pretty well if they do a good job of putting kind of the fresh spin on things. Again, it also wouldn't surprise me too, depending on what Riot does, that a year from now we're just thinking about this genre differently, about who we should consider, the future, biggest players here. And so it's kind of hard to give a perfect assessment without knowing what everyone is up to, especially when you got a looming giant like Riot in the room. And also, you never know too with Smash is always going to be Nintendo only, but with rumors of Switch 2 probably coming out sooner than later, and a new Smash there could also make sense and start making waves. So yeah, I mean, I think it's an exciting time for this genre, and it's good to see that kind of alongside the new console generations that these games are all trying to stay fresh here. And even as someone who hasn't been a big fighting game player, like seeing, Riot come out with a game or Street Fighter taking a new, even more like open world stance, like it makes it more compelling to someone who maybe doesn't want to jump into number 12 to like find like another like new fresh starting point to put their toes in the water, which I think could be beneficial, but we'll see.
Let me just assure you that you're not missing anything plot wise if you come in at 12 versus 10 versus 5. It like, I like fighting games. I'm not like a super fan, but there's, the core loop is the same, even if the story changes. Don't worry about missing anything there.
I guess throwing a different angle on the topic then is the in terms of platform and technology and like arcade scene. So like for example, in Japan, the arcade scene got weakened like really hard by COVID, right? So like that should definitely, I would think, impact, for example, Street Fighter's success over there, which might be doing, and I don't know what the distribution's like, but might be like maybe more successful in Japan because of the arcade scene versus like the home console play. And then you have the history of like, especially Street Fighter games and just fighting games in general, really struggling with like PC ports that have good net code and things like that. And then you look at the top two, as you mentioned, Smash Brothers isn't really well known for like internet play either, whereas Mortal Kombat might a little bit more lean towards like console internet-based play and stuff like that. Like, how do you guys think that sort of factor plays into this competition when you've got like the net code, the arcades, the people doing Smash Brothers tournaments as like, these in-person Evo kind of things? Like, how does all that play into going into 2024 with these games all kind of vying for that same attention?
It's an interesting thought. I wonder how big of the pie the arcade aspect is really, because to me the more interesting, not to change the subject necessarily, but the more interesting aspect to me is like, how do they incorporate live service into these games? Because I suspect that's where they make a lot of money. Of course, they all charge up front, right? So it's a premium game. Now going to $70 for Mortal Kombat. I'm sure Street Fighter will do the same thing. Tekken will probably do the same thing. But they like, Smash was a good example. They had their like character packs that they were releasing every so often. You had to like sign up for that, I think. Like there's Mortal Kombat does something similar where they had DLC packs where they're releasing new fighters. Like these are the sort of beats that they the big content drops, but they're also like very labor intensive to make new fighters and balance them and get their movesets right and everything. So there are other features. Mortal Kombat is the one I know best, but I don't know if Street Fighter has done something like this where Mortal Kombat has like an in-game currency that you can buy also, and you can use it on like different modes. Like they had this mode, I think it's called the Crypt with a K, where you can like go around this little map in first person, and you're like unlocking different sort of little like Easter eggs. It's like concept art and like different cosmetics and things like that. It's like, just little fun little things for the hardcore fans, but you get that currency either by purchasing it or by earning it in the game. So it's like another lever for them to pull from a live service perspective. So to me, that's the aspect that's more interesting, because I suspect, I have no evidence here, but I suspect that that's where they bring more ongoing revenue than say like arcade sales or esports tournaments or something like that. That stuff is all important for like marketing and like growing the community and things like that. But I don't know how big of the pie it is from a business perspective.
Yeah. It sometimes can be hard to get all that info, right? Like from these the numbers that they give. Like I'd even be curious to see how much the DLC characters brought people to buying the game. So like I'll admit I bought the game because I could play as RoboCop and Terminator. Although I probably don't count as a sale because I bought it on Stadia, and then of course, Stadia refunded me at some point when they shut it down. But it's it's interesting because it's like I was a lapsed Mortal Kombat player. I haven't played since like 3, but I was like, oh, I could jump in this time, not because I'm familiar with the characters, but because I could play as RoboCop or Joker or Terminator. And I wonder if like that sort of thing as well can help them bring in lapsed players. Maybe they don't care about the story, or maybe that feel outclassed by just really not knowing the characters at this point. And like, hey, I don't know any of the characters, but I know RoboCop. I could figure RoboCop out. Like I don't feel out of place.
100%. That like mashup aspect is so important, and like Smash did an amazing job with that, right? Like, I was super into Smash because I could play as Cloud from Final Fantasy VII. That's my favorite game. But same as you, like I thought it was really interesting what they did with Mortal Kombat, bringing in like the Joker, and like they have the whole like Injustice franchise also that they can like leverage if they want. The one that I really want to see come back is Marvel versus Capcom. Like bring that back. I will buy it. I will get all the characters. Like the mashup aspect is so important because people have this affinity for all these IPs.
Maybe that's something they could do as part of that new Street Fighter. So something, is Capcom. Then maybe they could get Marvel, because Disney's been doing a lot with their branding into these days and trying to do stuff with Marvel. So I'm not saying they will, but that would certainly be an interesting idea to try and bring it back that way. Because as you said, there's a lot of fans of that franchise. Whether or not it's sold a lot, it's definitely I think a missed franchise here versus some of these other ones that are dragging on a little bit in age at this point. But as you mentioned, there's also a movie coming out, that will help, I imagine, market, the short marketing window for the game, but then also getting remarketed next year for the movie, potentially, assuming it releases on time.
Yeah, that movie exclusive character is going to appear in the game at some point. Like he has to.
Right. As long as it's actually Carl Urban, then I'll be interested. But anyways, speaking of earnings and making money here, Take-Two and Ubisoft have put out their earnings statements.
Yeah, we can start with Take-Two, which, at a high level, the financial numbers honestly are kind of useless. Like if you look at it right now from the standpoint of their Q4 revenue was up 56%, I think. But Zynga being here this year, and not last year, is skewing that. There's different comps due to game release timing, etc. And so the current quarterly results as a whole are not actually that interesting, and not that much has really changed with Take-Two over the last quarter or two. But there are a couple interesting tidbits from little financial details here that I think are worth pointing out. So first, the company had 2 impairment charges buried in their financial results this quarter. One of them was a $54 million impairment charge related to unannounced projects that were canceled. And right now, I count 52 projects in the company's pipeline through fiscal 24 through 26, down from what their goal of, it was 69 in fiscal 23 through 25. So in my mind, that's just a sign that they're focusing on fewer but higher impact projects as a company. And that has shifted a little bit over the past couple years, which lines up with a lot of the discussion that CEO Strauss Zelnick has said about how the biggest IPs really are taking share, and consumers want to spend time with the brands that they know most, especially as these brands build bigger ecosystems with more engagement opportunities for players. So that was one little thing that I noticed. The bigger impairment charge of $465 million related to Zynga assets, and we've been saying for a long time that Take-Two overpaid for that deal, and this is them finally admitting that for the first time. Maybe not in words, but in numbers. And so. They said it's a one-time charge, but it was a multi-billion-dollar purchase. I think we all know that if the deal were done today, it probably would have been half the price that they paid. So an impairment charge of $465 million is maybe actually kind of low. But of course, how accounting works versus how we would view it in the market, like you sort of need to read between the lines. So who knows? Maybe there's other impairment charges down the road, but I guess this is them also feeling more confident and Zynga being able to kind of steady the ship and turn around from here. Although, of course, it still is a major anchor on the business for now and probably for the near term. So those are two kind of small, interesting tidbits that I think are worth pointing out. The other one, and in our pro coverage, Mario, our great writer there, he pointed out that even though management is guiding for low growth next year, quote, CEO Strauss Zelnick's comments that the period from April 2024 to March 2025 would be marked by several groundbreaking titles that would push the company toward $8 billion in bookings, $1 billion in adjusted cash flow. These bookings would represent a 45% increase over guidance for 2024. Such an ambitious forecast would not be issued for new AAA IP and must instead be due to the new planned installment of the GTA franchise. So, again, they haven't announced GTA 6. We all know it's there, but they're sort of announcing it in the numbers for that fiscal time period of between April 2024 and March 2025, when they expect the numbers to really start picking up. So we all know how these games go. It could get delayed one or two or multiple times. So it might not actually be that time period. But now we have an actual window, at least financially, to look forward to. And so you can backtrack from there and probably assume that, like, yeah, if that's the window they're aiming for, then probably pretty soon we'll start to hear more about this game. And so, anyways, that was kind of the main new points I pulled out of this earnings report. Otherwise, this is a company that still has great franchises that are doing well. The GTA isn't selling as well as it used to, but engagement on GTA Online has picked up a little bit from where it was. NBA 2K is doing really well. And of course, they're gearing up for new games and their biggest franchises like BioShock, Borderlands, etc. down the road, and these just all take time to get to. But nothing new has really changed there, other than these little details. So that's that. I mean, we could take this conversation a few different paths on, whether when Zynga will stop being an anchor for the business, whether Take-Two has other catalysts, etc. But I'll let you guys maybe comment on where you want to take this if you have other thoughts. We've of course talked about this business quite a bit, but if there's something new or something on your mind related to Take-Two, I'd be really curious to know what you think of all this.
Well, it's interesting how you put Zynga, right? As an anchor. For me, I feel I agree that I think Zynga acquisition was quite maybe overpriced, and they're still seeing the impact of that. I feel they're restructuring a lot internally, and they haven't seen any big games coming out, or nothing that has created hype. Maybe they have many things in development, but nothing that really is creating any hype. So it feels like they want to use Zynga to get into mobile, but it's not really making a synergy. Maybe this needs more time to happen. So I don't know if, for instance, if they have any plans to have anything related to mobile with the new GTA 6. that could be something like quite interesting, that you could do some stuff in the mobile that complements your gameplay in the console. But
I guess then I'm also wondering, Zynga was talking around Web3 quite a bit, like around that time. And with everything kind of cooling down around Web3, I also wonder if like they're shifting around within the company as well. Like, do you think they're like, oh, maybe we shouldn't do that. Maybe that's not the direction to go. Like, a lot of Web2 companies that, were dabbling into Web3 kind of like pumped the brakes pretty fast when things started slowing down. Like, I imagine if that's the direction Zynga was going, that could really slow down their ability to like help Take-Two grow.
Maybe. I think there's probably something to that in the sense that, Take-Two as an overall business appears pretty like they have pretty heavy diligence to making sure that they have good ROI on the projects that they work on. For the most part, doesn't mean they're always right, but they try to keep that focus. And so if there are the lower hanging fruit of Web3 projects that they foresee like pretty obvious struggles, getting scale and getting ROI on, I could totally see that being something that they dropped. And it fits with what I said, with just how like the number of projects in the pipeline, if you count today compared to what they said in the past, is down. It wouldn't surprise me if Web3 is a small component of that difference. But I mean, beyond that, I mean, it really is just the mobile environment has been tough as a whole, and they bought Zynga basically with expectations for growth, and then it did the opposite. And I think it's, actually, if anything, more like shrunk as a business, and it's, finding its footing to get back to growth again at some point. And all the while too, like continuing to streamline how mobile is run within the business, both shutting down certain studios, folding games into like the broader umbrella operation of Zynga, conducting layoffs here and there, partly related to the acquisition and partly just cost cutting measures in general. And I'm sure that has an impact also related to the project pipeline on mobile and elsewhere. So I think all of those things interrelate quite a bit. So it's not all great news from the sense of like, that means that the growth prospects maybe are less in the past, but being as focused as they are on the highest potential projects still bodes well for them. At the end of the day, GTA 6 is what's going to move the needle most for this business. Not really anything else. I mean, everything else adds up, but as like one project like that determines whether this company outperforms or not over the next 3 years or so, you could call it. But yeah, all the other inner workings are super interesting to track too.
Well, so much writing on that, then I would hope they would not try and rush GTA 6 out the door. I mean, they gave kind of a potential window for it, but I would imagine if that gets delayed, I mean, obviously companies, make the wrong decision all the time, but it seems like it would be worth letting that cook to fruition if you're betting that much on that franchise.
Yeah, Rockstar is typically pretty good at putting out quality products in the end, so I'm not too worried. But I guess I should probably switch gears to Ubisoft since we're entering our final moments. Maybe we can keep this one a bit briefer. And I mean, long story short, Ubisoft continues to struggle. We've chronicled the struggles of this business over the past couple of years on this podcast, and it really is just a continuation of what we've talked about over an extended period of time at this point. Bookings are now down 2 years in a row and are actually lower today than they were 5 years ago. Earnings are not great. More if you compare over the past year, debt has risen while cash has fallen. And the stock price is now where it was 15 years ago. 15, which, it's gone through ups and downs since then. But even so, that's a pretty striking fact, in my opinion. And Ubisoft recently has been the go-to example of a company that needs to get financially fit and more efficient, but it hasn't, at least at the same rate as other publishers out there. And they are starting to. Headcount is slightly down over previous periods, and they have a 200 million euro cost-cutting plan. But I don't think it's enough yet. And so we'll probably see more to come. And of course, they're dealing with their own jurisdictions in the countries they operate that have an impact on what they can do. But even so, I expect them to get try to get more efficient, even if it is challenging. Most of the backlog and pipeline is still struggling and questionable. There are some interesting games out there, like X Defiant has, sort of been making waves in the community. Although we talked before about how the shooter market is very top heavy, and so it's hard to break through with something new. And so it's still probably a lot of questions about the true potential of a game like that. There is growth in certain areas with Tom Clancy games, but interestingly, the main place Ubisoft is doubling down on is Assassin's Creed. They're increasing headcount on Assassin's Creed actually quite a lot right now, at a time when they're trying to cut headcount most everywhere else in the business. And also the next game, Assassin's Creed game Mirage, it's going to be less live ops focused, and they're still teasing their Infinity platform. So I kind of view it as like this company is putting more eggs into the Assassin's Creed basket. And I think that makes sense for the same reasons we talked about with all these other companies, that the biggest and best IPs continue to gain share. And really, you need to work hard to make the most of that. I am a little curious about the different types of Assassin's Creed games, how that's going to go, and really how it's all going to come together on one platform. I don't want to judge it too soon, but I think it's fair to have questions until proven otherwise. In this case, but also, I guess lastly, I'll say Ubisoft, quote, expects strong top line growth and non-IFRS operating income at approximately 400 million euros, end quote. And so they're trying to target growth from here, which is very much needed because it's been falling, as I mentioned, for 2 years in a row. But I also might not fully trust those targets, given how things can be delayed at any time, like they have been in the past. So maybe the theme throughout all I'm saying is that it's just been a long time of Ubisoft underperforming and not hitting the expectations that they set. And so when they throw all these new things out, the honest, typical reaction now is just to have questions and be a little skeptical and to kind of wait and see if they can actually pull it off, which is unfortunate, but that's seems to be the pervasive view in the market, given how this company is now trading. So that was sort of my view on what's new with Ubisoft. And so I guess my question for the group, as we probably get closer to wrapping up, is whether you think Ubisoft is making tangible progress to really turn things around, or is it still not enough based on what we're seeing right now? And if it isn't still enough, then what are the other things that they need to do to really make the next, call it like 3 years, more of a real turnaround for them as a business?
I mean, personally, I think they've just been delaying and dragging their feet on too many projects that either need to be cut or need to be like get out the door. Like, say, for example, Rainbow Six Siege for mobile has been dragged on forever, and they just keep doing these beta periods. And I mean, the game looks like it's close to done and has been for a while. And I got to imagine they're just having trouble figuring out how to make it the right market fit, or to try and like expand the audience enough, because it's a difficult game to port. But that's example one, like they probably should just put out. But then you've got ones like Skull and Bones should have been cut a long time ago, and they just keep dragging that on. And it's I mean, I haven't seen like the earliest versions, but I don't imagine from what I've seen over the last year or so that it's really gotten that much better. It's still just open world formula stuff that they keep putting out that people are kind of sick of at this point. And they also started burning bridges in that territory with like the Ghost Recon franchises. So it's like they've just like kind of not really left a lot of good options for themselves. And that's why they go to Assassin's Creed. Whereas like, and I don't think X Defiant's really going to move the needle all that much for them either. So it's like, they're kind of not left with a lot of options. I don't think we're going to see like a new Rayman come out of the works or something and like blow everyone away. So like they just have so few franchises that they aren't either just like letting languish or needing to put out like a new Splinter Cell. I think everyone's like, well, why don't they just do that? Right. Those kinds of things where you wonder how they're managing these franchises that seem like that is probably where they could be a lot more efficient.
Yeah. Do you think the doubling down on Assassin's Creed is going to work as much as they hope it will?
I mean, my personal guess is partially like that some of it'll work and some of it won't. They don't have a perfect track record with Assassin's Creed games, and I think being overly ambitious with them, doesn't usually work out well for Ubisoft. I think when they're overly ambitious, they tend to bite off more than they could chew, and they've released some very buggy Assassin's Creed games in the past and run into a lot of problems there. So I don't know. I think, again, I feel like they're playing out their open world formula too much, and maybe I didn't see the numbers for Far Cry 6. But they're still just kind of just dragging that formula through the mud with all of their franchises and kind of burning people out. Even the last Watch Dogs, I don't even see them potentially continuing that franchise anytime soon because that last one just didn't really make enough of an impact. And I don't see them also introducing like new IP. All that much. Like the XDefiant, you could call it a new IP, but it's basically just a hodgepodge of their other franchises. They're even trying to inject like Far Cry 6 characters into it, almost to try and give relevance to their other existing games at the time, just to try and like bolster those up. But it's like if XDefiant doesn't even get released anytime soon, how relevant is that, right? Like, is it going to have all Assassin's Creed characters to get people interested? I mean, it's a weird fit for everything, and I think, like I said, I think they're just in a really weird spot. They need to maybe just cut some things out and just be like, we're not going to work on those. Let's do like what they're doing with Assassin's Creed. Let's focus. Let's also like not let some of these franchises fall apart that we know we can do well and we just kind of lost direction, like Ghost Recon. They can do those well. They just got on some tangent with the last two that just was the wrong direction. They could fix it. And they've got these Division games ready to be kicked out onto mobile and on a desktop and console as well. If they can get those out and do well with those, I think there's areas of potential success for them there.
And they are doing, to their credit, they are doing some of that. They have cut a bunch of projects. They are trying to get more efficient. And they are trying to even break from the same open world formula, like with this next Assassin's Creed game. But yeah, the ambition makes me a little nervous with the whole Infinity project and how much of the company is probably riding on the future of Assassin's Creed being successful. But yeah, it'll be interesting to see. I just kind of wish that they didn't, as a company, put themselves in a corner with Tencent coming in and basically reinforcing the family control indefinitely, which makes just the strategic options much more challenging. So really the same management team is going to have to, that got Ubisoft into this position, is going to be the ones to have to figure out largely how to get them out, which will be interesting to see how that goes. But anyways, yeah, I think it'll be probably a hit and miss. I'm hoping that there's just too much pessimism baked in at this point with like how much Ubisoft has fallen, and that some of these things can work to just bring them back to a steadier state. But time will tell, and I guess we'll keep on tracking quarter to quarter, and hopefully it won't be as we'll feel a little better in the times to come.
Definitely. I think, there a lot of us, I think, have, franchises from Ubisoft we'd like to see survive. So hopefully they can manage to make it through, right? And those don't just get sold off piecemeal or something like that over time. But anyways, want to thank you guys all for a fantastic conversation, as always. And also remind everyone about the mailbag. If you guys want to make sure to shoot us emails at podcast@naavik.co. We're definitely listening, feedback, questions, things like that. And we'll definitely try and make sure to follow up on those. Some of those may require a different group of people to follow up on, depending on the type of question you ask. So we want to make sure to get those to the right audience and do a good job with data and things like that for you guys. So definitely keep asking away. I know that some of you have sent some already, so keep at that, and we will respond to those. But thank you all for listening. Thank you guys for being here today. And of course, we'll see you all next week.
If you enjoyed today's episode, whether on YouTube or your favorite podcast app, make sure to like, subscribe, comment, or give a 5-star review. And if you want to reach out or provide feedback, shoot us a note at podcast@naavik.co or find us on Twitter and LinkedIn. Plus, if you want to learn more about what Naavik has to offer, make sure to check out our website, www.naavik.co. There, you can sign up for the #1 games industry newsletter, Naavik Digest, level up your insights with our premium research platform, Naavik Pro, or contact us to learn about our wide-ranging consulting and advisory services. Again, that is www.naavik.co. Thanks for listening, and we'll catch you in the next episode.